Yeah, good morning to everybody logging in. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. How are ya? How's your mum? Hey, my name is Wayne McDonald. I'm a currency trader. Before this, I was a venture capitalist sitting in my office. I had 3 windows with a view of the San Francisco Bay Bridge and the bay below me. It was fantastic, and I would sit there and I thought, you know what? I'm doing what I think I'm going to be doing the rest of my life. And I can't believe I got here at such a young age. Very cool. I was very happy. I hated having a boss. My boss was he was a genius, but he was a jerk at the same time. Learned a lot from him. Learned a lot about sales. He was a great salesman. But I also learned how to maybe not be a jerk. So anyways, that's really cool. And then I was reading, and believe it or not, it was Architectural Digest magazine about a kid in New York City who was redoing his brand new apartment. He bought it and was just I-beams. And he was on like the 130th floor of some beautiful building. And it was just crazy, right? So they had all these architectural designers in there, and they built this beautiful apartment. I'm like, damn, boy, that's a nice apartment, right? I don't know what it was, 30 million or something, right? I'm like, right? Nice, $30 million. I'd like an apartment like that, right? And then there was a little side note right at the end that never mentioned the guy's name, but just said this kid was like, 38 years old or something. And he had this $30 million apartment. And then they told a story and he's like, well, he owned the apartment like 20 floors down and he had bought that earlier and fixed it up really nice. But before that, he owned the one 20 floors below. And this was his third apartment in about 10 years or something. I'm like, dude, so his first apartment as like 20 something was, let's just say a $12 million apartment. Then he upgraded to a $22 million apartment. Now he paid $38 million and dumped about $6 million into making it livable. I'm like, fudge. And at the very bottom, it said it was a currency trader. Forex trader. New York City. I'm like, what the frick is a Forex trader? Because I'm just some stupid venture capitalist. I'm like, I ain't got no apartment like that, right? Living on the peninsula, and earlier before that, living in downtown San Francisco. And I'm like, dude, this guy's a baller, right? So I'm like, what is a Forex trader? And so I Google Forex, and it's like, oh, it's approaching $2 trillion a day. And like, you got to remember, this is the internet, right? Back in, I don't know what year this is, 2001 or something. I'm like, $2 trillion a day. That's a scam. There's no way it's $2 trillion a day. A day? Like $2 trillion a year. I'm like, that would blow me away. $2 trillion a day? I'm like, that's stupid. There's no way it's $2 trillion a day. So I do some more search, blah, 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 blah. I'm like, fudge. Oh my God. $2 trillion a day. Why am I pissing around with $100 million a year market? Like when there's 2 trillion a day. I'm like, I got to get into this thing, this Forex thing. And I actually really liked it in the beginning too, this idea that it was a secret. Because, when I started, retail Forex was so brand new. It was unbelievable. There were kids running brokerages out of their dorm rooms. That's how early I got into Forex. And I realized like it was just banks making all this money, right? Like this is the secret way banks made their money. And I'm like, oh my gosh. So I had to wire, I think it was $5,000 was the minimum to open a Forex account. And I think it was FXCM. It was like minimum $5,000 and you had to wire it because they couldn't accept credit cards back then. And you got a platform, but no charts. So I was paying, I don't know, more than $100, maybe $200 a month just to have charts. And you would do technical analysis over here. and then you'd open up your trading platform. And this is, I'm kind of giving you a version of an origin story because I want you to understand how I'm teaching you, and it's how I taught myself. So think about that. You go to a chart before you, right? And what did I do before the chart? Well, I would open up my trading platform, and there were some, the when you open up the platform and you see all the blinking lights of the prices changing, and then you could open up a window and you could get things like overnight volatility. I wasn't even really sure what that was, but what I did was it showed me which ones had moved, and it would show you sort of a plus or a negative, right? So I would take all that data and I'd manually enter it into an Excel spreadsheet. And I would do, euro, dollar, euro, yen, euro, Swissy, pound, yen, pound, dollar, pound, Swissy, right? So on and so forth. And after maybe an hour of entering, I would have all the overnight volatility, which currency pairs went up, which ones went down. But then I made basically an index. I made something like this, essentially. Okay. And what I would then look at is then I would organize them, because now it was pound versus everything, if you understand that, right? Pound versus everything, dollar versus everything, euro versus everything, Swissy versus everything, yen versus everything, and essentially making an index of strong and weak. Then I would organize the strongest pairs, right, or the strongest currencies on the left. And by the way, I had a form. I had this beautiful form I created, right? So the second step was then to take the data and organize the strongest currency all the way down to the weakest currency. And I'd put them in order. And you'd find like dollar is strong right now, and Aussie is weak, right? And so I would have strongest and then weakest. And then I would then analyze. So now the third step was analyze my costs of doing business. Because back then, an Aussie yen trade was probably 9 pips, maybe even like 12 pips spread. Shows you the difference in liquidity now, right? Because we've gone from $2 trillion a day to $6 trillion a day. So now we have more liquidity, which means lower spreads, because you don't have to go so far to find someone to get on the other side of your trade. Big benefit there, right? And so I would have to analyze it, because what if I had generally the same opportunity on Aussie yen and Aussie dollar, but the spread on Aussie dollar was, let's say, 5 pips and Aussie yen was 12 pips. So I'd say, well, I'd start with the Aussie dollar first. Okay. So I'd organize all of those, right? And at the end of all this analysis, I would know something like, okay, based on overnight volatility, because I didn't know anything about fundamentals, right? So I'd say, based on what's happened over the last period of time, I'm going to start with the Aussie dollar. That's going to give me the least cost and the best opportunity based on what has just happened. Doesn't mean it, I later found out it doesn't mean I'm going to do good today. It's just that's what has been doing good, but it helped, right? So then check this out. I would already know I want to buy the Aussie dollar. Then I would boot up my charts. Only then would I employ technical analysis. And so there's where I come from. Strategy and then tactics. The strategy was look at what happened and whittle it down to my best 2 or 3 currency pairs. What do I want to buy today? What do I want to sell today? Then open up my charts, only go to those currency pairs, and then do technical analysis. Is this the right price and the right time? And very often I'd find Aussie dollar's already up. So I'd then do a Fibonacci retracement, for example, and say, oh, well, if I can get a 382 dip on a 15-minute chart, maybe I'll pull the trigger. That's how I'm going to teach you. Maybe not that exact methodology, but the strategy of that methodology. Knowing what you want to do first, then doing your analysis to say, is this the right price? Is this the right time? Okay? And Jim will remember this. I think Jim is the longest, the oldest. I don't longest member. I don't want to say the oldest member. Jim would have been there back in 2004, and this is what we were doing on a euro dollar 15-minute chart for for 5 hours a day, 16 hours a day, that kind of stuff. So the methodology hasn't really changed. The idea that you have a strategy first and then you go do technical analysis, not using technical analysis to go find yourself a trade. You see the difference? So typically I won't say, oh, go do a bunch of cross pairs. Okay? Yeah, Jim's not the oldest, right? And Jim's got beautiful hair. And Jim's got beautiful hair. But imagine that there are people here that have been learning that same way. This might be your first day, but I want you to understand what I do. And I think that may be different. So typically what I'll say is you can start with your fundamental bias, right? Jim's like, moving on. What, you don't think you have beautiful hair? Yeah. All right. Right? So we start with the fundamental bias and then we go look and try to find, is this the right price and time to employ that strategy? This time of year, there's no fundamental. So now you could do a lot more of the cross. And that's where I kind of started because I had no fundamental background or basis to my trading back in 2002. I wasn't that familiar with it. Okay. So now we're going to go to that methodology and just simply look at what's strong, what's weak. Okay. Try to get some trades. We call that shooting at rabbits. Who cares about wealth generation and portfolio management? We're just trying to make money today. Okay. So we're kind of going back to more of a basic style of trading, which you might actually be more familiar with. And then we're going to add layers onto that later. So anyways, that's what I'm trying to teach you here at Forex.Today and at fxbootcamp.com. If you appreciate this type of knowledge that I'm bringing to you and like giving to you, right? And sharing with you. I mean, some people would look at the webinars I provide to you every day and say, look, this is a $1,000 course. Yeah, I know. Okay. I once back in 2007, I did a big like 3-hour training at the FX Street conference in Barcelona, Spain. And I go up there, I do my presentation. And then I finished, and Rob Booker was speaking next, and he had been at the back of my webinar for about the last maybe hour. And I get to the back, and Rob comes up, and he's like, man, you give him a lot. I'm like, hey, I give him everything, right? And so I'm trying to give you incredible value. And what's your cost? Not money, but you should visit tradersway.com, open up a demo account. Okay? That's the cost that these live streams come with. So if you could please visit tradersway.com, that'd be great. Okay? And by the way, I don't do that because I'm going to make money off of your trading and all that. That's no. Okay? They earned my loyalty and respect as a broker many, many, many years ago. You're going to need a broker that you trust. I don't know who you trust, but start there and see if they can earn your loyalty and respect too. Okay. Diaco says, Wayne, YouTube is full of traders talking about graphical analysis, but when you ask about fundamentals or seasonality, they don't know anything. Yeah. Cool. Makes sense to me. Let's see if I can get this. I got to add my webcam here. I don't know why it stopped working. Video capture device. I think that's right. Add source. Razer webcam. Whoa, hey now. Man, it's funny. I only see this when I do the live streams. I don't see it when I'm walking around my office. That's paint, by the way, with silver and diamond dust in it. Unfortunately, you need special equipment to apply it. And painters I've hired, they look at that and they're like, I don't know that kind of stuff. Anyways, cool. That's why my channel is gold. Nice. Hey, scalping is fine. I have no problems with scalping. I just want you to do more than just scalping. So now we got our charts up and running. Okay, great. So look, scalping's fine, especially this time of year. It may be all that you have. So typically what I'll say is I don't even want to look at a cross rate. And a cross rate means like Euro CAD or something. But this time of year, it is appropriate. Okay? And the reason for it is I don't think right now we have a fundamental trend in play because we lack fundamental traders. We lack the normal market participants. So all we have is this sort of short-term strength and weakness. That's why I bring this up. In the old days, I would do that. I would do all my analysis. It would take me more than an hour of filling out an Excel spreadsheet that I created. And then I would come up with Euro CAD. Okay. So typically I would ignore that, but now you can do that. Okay. I don't even have a chart, but we can do it like this. Watch, new chart. I don't even know where they would put this. Euro CAD. See, I don't even trade Euro CAD. Okay. Cool. Do you like that chart? Okay. Change the template. See, all the normal templates I've removed. Okay. And now I can change them. Cool. Okay. And in this one, man, I got to change these. No, this is always in the wrong spot now. All right. So Euro CAD. Where did we have this? Y position, blue, Y position, no, red, green, blue. What was this? 111? Yeah. What template was this? Trend line, right? Template, save template. I just got to slowly update. What was that one? It was automatic trend line, wasn't it? Okay, I'm going to update that. Save right over it. Yes. All right, cool. So anyways, what do we see here with this template? And by the way, all these chart templates are available at metatraders.com. All the files in the auto installer have been updated. I haven't done the other ones. I have to get my drawing tool. Epic. Get my EpiPen going. Okay, so what do you see here? Well, we have to go back. Euro's been strong overnight. CAD has been weak overnight. So we know if we're going to play that as our analysis, we're going to try to buy this. Okay? And what you would do now is wait on a smaller time frame for your opportunity. Okay? And that's that. What opportunity? That's where you employ things like moving average crossover techniques. That's where you can apply oscillators. If you want to throw in a Stokes, I would use a Stokes here. Oscillator 5, 8, that's not right. Let me open that up again. It's not right, is it? What is it? 853, isn't it? Or 835? 83. Is this right? 835 or 8583? That doesn't look right. That definitely ain't right. It's 583. Better. Cool. Nice. Okay. And I'm looking for situations like at support. By the way, if you're not at support, ignore it. This is where a lot of sort of mediocre gurus kind of mess things up. They say this is always a sell, this is always a buy, this is always a buy. That's not true. Okay? You got to be at support first. Okay? there's some divergence here. That's interesting, right? But the thing is, if you're going to use an oscillator, you're going to look at something like this. You're at support and you're oversold. And, of course, even more important than being at support, you already know you're a buyer. So you're a buyer at what price? Support when? When it's oversold and then starting to rise again. Okay, so if you don't like oscillators, how about you take the 5A cross? And then you're going to say, but Wayne, the moving averages, the moving averages, the moving averages. Well, on a 15-minute chart, we're using moving averages to analyze the speed and direction of the market. And in this case, it's mediocre. Yeah, we already knew it would be mediocre this time of year. But maybe it'll warm up. Did you guys see that retail sales? See, the issue with retail sales, if prices are going to go up, are people still buying? Or do they say, I'm going to not buy? You remember when lumber prices were up like 300%? People said it was the end of the world. Guess what? The government didn't step in and screw things up. So what happened to the lumber market after many weeks of just prices rising and rising and rising because of supply shortages? People stopped buying lumber. But because lumber prices were high and lumber manufacturers were able to fire up the lumber mills, they're like, oh my God, look at lumber prices, hire people, right? And all of a sudden they made a bunch of boards and prices came back to equilibrium very quickly, by the way. Okay. And without government help. But anyways, here we are in EuroCAD and we're like, well, this is mediocre, but you think it has a chance of going up. And one of the things you could do is say, well, you know this is mediocre, but you also know you're a buyer. You're right around the right price. So when you drop into a 5-minute chart, do you really care about the 5-minute 200 EMA? Probably not so much. Do you care about this? No, because you've already made these decisions. So remove the information, right? Remove the information that is not necessary. What is necessary now? Well, you already know you're a buyer. And you already know you're at around the right price. So now it's just simply, when do you pull the trigger? You're not deciding, should you pull the trigger? It's at what price will you pull the trigger? Okay. A bounce here, maybe use an oscillator. This one says it could have been a little more oversold. Okay. That's fine. Okay. But the thing is, you make your decision. And this time of year, it's quite binary. So you'd buy this, for example. Let's just for fun buy this. Okay. Okay, I'm not saying that's good. You should be buying it down here. But what I'm trying to say is you put your stop there, and now it's binary. It goes up today or it doesn't go up today. See, if it falls, then that relative strength has died. You made a reasonably informed investment decision, but the volatility that created the move earlier has waned. Okay, is this the right time of day to be trading? Yeah, stock market's opening in 25 seconds. So you can almost think of it like this. You have a price and you have a time. Okay, now typically I have you use this as time. Okay, so like buying gold and buying oil, I've taught you many times the exact time to be doing it. Now, you don't know if you're a buyer or a seller in those markets based on technical analysis alone. I mean, you know whether it's a reasonable opportunity or not, but what you're trying to do is catch new volume. It's very predictable that this is a time of day to be looking for a trade like this. So now this is the second chance pullback, and it's either going to do this today or it ain't. Kind of like a scalp. Not really. It's a market open type trade. Now, again, right? If they work on all. It's meta as long as you have the MetaTrader 4 or MetaTrader 5, it's broker agnostic. Okay? So, what's the basis? Euro has been strong. Has been. CAD has been weak. Has been. This could change in the open of the North American market. Maybe there were not buyers of CAD in Europe. Maybe Europeans don't want to buy CAD. They bought Nokia or something. Who knows, right? So all you have this is, and we call this relative, we call this relative strength. Okay. Again, no fundamental bias behind this. This is not central banks. This is not the wind in your sails carrying you. This is you floating out at sea on a raft. There's no wind, there's no current, and you're hungry. Well, there's not much you can do. Paddling's not going to do much, probably just burn your strength. What you have to do is wait for the winds to return or for you to float into the currents. Hopefully you know where the current is supposed to be. Okay? The ocean is relatively predictable. So in this case, you're like, well, I need to spend my time making sure my raft is stable and sturdy, not falling apart. So you work on the ropes and stuff because you don't want that to fall apart. To me, that's a form of like protecting your money for when the market conditions do. Like the last thing you need is your raft to fall apart. You're not doing anything. Then the wind shows up, and then the stress of the wind pulls your raft apart and you drown. Like, well, you should be doing something while you wait. So in this case, you fix your raft, and what? What else? You're like, well, we should fish. I'll work on the ropes. You drop a line and make sure we got food. Maybe work on water collection. Maybe it might actually rain, right? Maybe it'll rain today. Okay? And that's all we're doing right now. Drop a line. Protect your money. And if you got a shot, right? You take it. Why? You're just going to pick up some pennies while you wait for the real money. Okay? Okay? All right, what do you think? Was that good? Huh? Was that good? Would you please click the like button? If it was good, tell me. Okay? If you got a problem, I'll solve it. Check out my hook. Well, my DJ revolves it. Now, you should be in this trade here. Okay? And the cool thing about it is on this, you're right, you could wait for it on a 5-minute, or you can drop into a 1-minute. Okay? But this is pretty clear. At this point, you know the 5/8's going to cross. You've kicked it off support, and this is where you wait for your fib. Hey, if you can catch a 50% fib, it's all good. Well, what if it comes down to 618? Dude, it's like 4 pips. What do you care? Are you going to buy the dip or not? Okay? And that's where you got to get your confidence. So how do you get the confidence? Well, we did a relative strength exercise. Then we did technical analysis. We have the right price. We look at the time. Market's opening. Okay? Boom. Long and gone. Down to get the pippin on. William says you bought it and it flew. Market manipulation theory works. I don't know why you typed it that way, but it's totally funny. Okay. Is this going to last forever? Is this the trade of the year? No. Okay. So that's step by step by step by step by step by step. How to put together a relative strength plan. What do you stink? Okay. Is it a good trade? No. But it's a trade. What else could we do on this one? Aussie Kiwi. Wow, that's interesting. All right, so that would be typically a trade I avoid. I would typically avoid a trade like that, but let's do it. Okay, let's use a different one. Okay, let's do a different one here. Template, automatic Fibonacci. All right, what do you think of this? Let's analyze this. We did our relative strength. Let me open this and fix this. I got to save this now. This was automatic Fibonacci. Save it. Yes, yes. All right. What do we know? Well, based on our relative strength exercise, we know, or we believe, this is moving down. Okay. Yeah, these other templates, the things with the X's, template, see these? These are the things that you get in the complete package at MetaTraders. Not the $5 package, the upgrade. All right. It's not necessary. I'm just showing you different ways of doing the same thing. So you wake up in the morning and you see this in your relative strength exercise. By the way, just so you know, before the indices, what I used to do is I'd go to Scan Aussie. This is why I have Scan Aussie. Okay? And I would say pound is stronger than Aussie, Swissy is stronger than Aussie, Kiwi is stronger than Aussie, and US dollar is stronger than Aussie. Aussie is weak. That's 1/2 of the relative strength exercise. I realize Aussie is weak. It's on the denominator. Aussie is weak. It's on the numerator. Okay. Aussie is on the numerator. It's weak. Aussie is on the numerator. It's weak. So it's a weak across the board. I have permission now to sell this. So then I can then look around and say, well, I don't have one for Kiwi, but you'd find out that Kiwi is the strongest, right? So, because that's why I have these indices. So anyways, to go back to where we were, where were we? Oh, we were on the indices, right? Okay. So anyways, that's how you get there. And now you're in the business of selling because you are a bear. Fundamentally, no. It's just what it is this time of year. That's what it is. What's the cost of the complete MetaTrader 4 tool? Less than $1,000. All right. So, okay. This is where price action comes in. So this is hourly, okay? So you would mark up your charts like this. We call that price action. We discussed price action yesterday. You drop through support, okay? Comes back to resistance, but we call this, right? This is a role reversal. It used to be support. Okay, let me clarify this one more time for the newbies. By the way, did you click the like button yet? Come on. Okay, used to be support, but now it's resistance. Boring. You could do this all day, every day. Okay? And by the way, just to put an exclamation point on this, if you don't know how to do this, you don't know how to trade. Okay? There are two things I believe you must have, and they're both leading indicators. Okay? Pivot points, I love them. Okay? And price action. Okay? Because pivots are really just, right, support and resistance of the market. And price action is support and resistance of price. Price-based support and resistance, market-based, right? Price action creates the support and resistance here. Pivots are market forces that create the support and resistance. As they say in Canada, it's the same, only different. Okay? So anyways, if you don't know how to do that, you don't know how to trade. I don't think you're going to be consistently successful if you don't know those things, because they're both leading indicators. But anyways, so check this out. You would have got this all day, every day. All day, every day, you would catch this. Then we look at this. There's our general guide. I'm trying to get this to be right. What do we call that? Another role reversal. Again, the basis of trading. Role reversal. Okay? This is price action. Is it always precise like the last one? No, it's not always precise. It's a guide. But bear in mind, you are a bear. You couldn't buy this if someone forced you. If someone put a gun to your head and said, buy this, you're like, I can't do it. I don't know how to do it. I can't buy in a falling market. I'm sorry. You're like, and they're like, you have to. You're like, dude, I did relative strength exercise. This is clearly going to fall. It's made a lower low. It's retracing up to make a lower high on a roll reversal. I'm sorry, I can only sell this. Okay? So anyways, new lower low, what do you set up? Lower high. What price? Well, you could do a Fibonacci. So Fibonacci is telling you this is a 50%. Okay, the lower high is there. Right? You're trying to kick it off the 21. That's a general guide. Not always perfect, but it's a general guide. Okay? But a 50% retracement or a 382 retracement, it's all good. Look at this 382. Nice! So here's the thing you don't know, right? Very often people are like, how do you know which one? You don't. Okay? This, I'm trying to show you, this is a 50%. So you know you definitely want to take it off 50% if you get that chance. And here's the 382. So what you do is you end up creating a zone. Okay? You're like, I like 50%. I also like 382. By the way, I don't use 23.6. I use 21.4. This is just this standard tool. It's all good. It doesn't matter. Okay? That's the cool thing. If you know how to trade, it doesn't really matter what tools you use because you have price action and pivot points. And beyond that, you use oscillators. And you might use stochastics. Someone else might use MACD. Someone else might use CCI. Someone else might use, what was it called? The alligator, blah, blah, blah. Like, who cares, dude? As long as you know what you're doing, it doesn't matter what tool. If you're a race car driver, you can probably get into any car. Some cars are faster, some steer better, some have more endurance. But hey, look, as long as it's got a seat, a steering wheel, throttle and brake, you got it. Okay? And that's another way of looking at it. Now, is that a market open trade? That is not a market open trade. But that's a day trade. Okay? On relative strength. Okay, now will you please click the like button? The little thumbs up button? It's amazing. Just barely half of you have clicked the like button. Huh? Just amazing, huh? What do I got to do? Is this TikTok? Do I have to take my shirt off? Huh? You won't like it unless I show you my boobs? All right. So anyways, another way of looking at it.